Is Tuesday, December 16th, and we are here with another edition of Chart the Markets. My name is Mark. I'm from Blunt House Technical Analysis, and I'd like to thank my good friends at FEG Token, SmartDefi.com, and of course, our exchange partner at BYDFi.com. Now, we are running into the holiday season, and I'm feeling a little festive and a little generous, and what I would like to do today is, in addition to the two $50 trading bonuses that are available to new users when you sign up, because we're going to pick two of those today, I am also going to give away 30 days access to the trading script indicator that you see in our streams each and every week. And all you have to do is register a new account. This is for new users at bydfi.com. And you need to use this following code: capital K, 5, capital Z, the numeral 4, capital T, and then lowercase p. That's our code. Sign up today, make a trade, make a small deposit. Send me your user ID. You can do that from our Twitter page if you like, or X page at Blunt420, or just follow the links in our posts. And I'm going to select a winner today and give you 30 days access to that script. So, with that said, we're going to move right along, and we are looking at a daily chart of Bitcoin. Now, this is the same chart that we've been looking at and asking you, hey, check the receipts. Let's see how we're doing. Is price behaving the way we anticipate that it would? And for a while, we've been saying you have to kind of change your mindset when you're dealing with what used to be support, now being resistance. And this is because things don't always go as you anticipate. And it's very clear here that this 500 MA pink, as we've been telling you, is now resistance. And you can see the difficulty that price is having working through this level. And this is really a game of levels. And this is where a lot of people are going to make mistakes, longing into resistance. That type of behavior, thinking that this has got to be the one that goes through. Well, as you can see, it's not always an easy switch to the upside. And, although today is a green day, I don't know what we're up. Let's check quick. 1400, something like that. Sounds like a lot. What are we doing on the chart? And this is why, someone can say, oh, the market was up X today. That's great, but what does it look like on the chart? And this current candle, this current daily candle, hasn't even hit the 5 EMA yet to test it, nor has it obviously hit the T line. Yesterday's did, and look what happened. Pulled right back. Today's candle hasn't quite made that move yet. And, the title of today was, the only time you get faked out is if you front run the chart. If you follow the chart, you're much less likely to get faked out. And maybe this is hey, this is the bottom, you're longing into resistance, but hey, it's going to break, right? And then you just keep paying fees, entering and exiting trades. Just break this down into little pieces. If we're looking for nice entries on the daily chart, what do we do? On anything we're trading, I look to the 4-hour, because I understand that everything is fractal. The way price behaves on this 4-hour chart for Bitcoin is the way price can behave on the 4-hour chart for oil or IBM. It's a language. And what you can see here is, in red, is the 200 MA. Look at the resistance that it's providing. It's our most basic bull-bear indicator. Price doesn't want to push too far beyond the upper value range. Right? We're only using a handful of things on our charts. Volume profile, which shows you an upper and lower range, and then a point of control, which is the most concentrated area of volume, and then there's the gaps within that price can move up and down quickly in. And then a set of moving averages, at least right now. And look at the resistance that this level at 93.4, and again, depending on your feed, it might look a little different. But that's obviously what price has to break to the upside in order to break out again, or at least push for another level. The lower value range is acting as a bottom, upper as the top. Like, this is why we use the volume profile, because you're able to trade in or within a range, because we like to trap price, and then once we've trapped it, or we can track it, and then we trap it in a range, and then we monetize that range. And within this 4-hour Bitcoin chart, you've got a gap. So it kind of makes it fun. You'll see here, boom, big gap down. Another big gap down, same area, same area. Here's the gap through the upside, but same area. Right? That's why it's fun to trade. What's the resistance on this 4-hour chart for Bitcoin? And we basically have all our averages on it. If it's hard to see, I apologize. But there's your 200. That's your resistance. Upper value range. There's the 50 in blue and the 20 in green. The purple's the 100. Are we trading above or below those levels? Below. So we're within a bearish trend. There was your signal way up here. This big red dagger triggered that, not without a problem. Impulse down, sideways. What's the interpretation after an impulse down when price goes sideways? It's bearish, right? Because if it was really had anything in it, it would be pushing to try and move past the levels of the T-line and the 5 EMA. And look, it's just not doing it, it's just going sideways. But one thing you can take away is that the divergence between the two levels was down. And that tells you your trend down is intact. That's what you're kind of looking at. You know, you don't know what the next candle brings, but we can follow what we use for trend. Even in here, you know, that's 8 hours of positive price action. And what happened? This wick gets to the 20, tops out, and then this ends up being the failed breakout that rolls over and takes out the previous wave's low. But you had a better understanding or probability of knowing that was going to happen because you could see that divergence to the downside. You never triggered a buy here. And even if you did, it's an instant rejection. First touch on that time frame. First attempts have a higher probability of failing. And that's what happens here. Now that you've done that, here we are. We still have to test that 20, just like you did here, to see if we get a rejection at resistance on that time frame. Do you see a buy signal yet? No. Right? So we talk about paying the insurance. That's what this is. This is the market still trying to figure out what it wants to do. Now, the next candle we see may or may not trigger a buy signal. It might just be a situation where it rolls over and then takes out this level. But we're not going to front run it. This is, I just interpret this as indecision. And then waiting for the signal is what kind of gives me that confirmation. Now, if I want to kind of look inside that 4-hour candle Maybe I'll switch down to the 1 hour so that I can see what's going on here. This is a bullish chart right now. Get a buy signal at a major moving average, and so far, price has been trending higher. Let's just bring in the volume profile because we want to see where the gaps are. Now, see this gap here to the upside? It's in this light gray kind of coloring on the volume profile, which indicates light trading. So when you see these gaps, the reason price moves up and down quickly through them is because there's nothing of substance in the candles to hold price up or down. When you have this gray area, that process can be kind of exponential because there's less volume to start with. Does that make sense? So when you see gaps within these gray areas, just realize that they'll have the same impact, but it just could be more intense. So what you're hoping here is that the divergence between the T-line and the 5 EMA holds on this 1 hour, and there's, 38 minutes left on it, so we got a bit to go, that you get support here, and then end up with, another green candle at the 50 MA, and I'll wake up in the night for the green candles at the 50. So getting that done, if that's what you get, you have the opportunity to push up through this volume gap and look for, which I think is the lower value range, and or the 100 MA as a target as well, with the point of control to the upside, and that's where the bulk of the volume is on this time frame. You don't have to front run anything. You just have to utilize your time frames effectively so that you can see inside those candles that those time frames that you're currently trading. So what does Bitcoin look like on the weekly? And we've talked about this because it's kind of important. Are there really any surprises for us? I don't think so. We've talked about, okay, the market told us, if in the most conservative way, that was our confirmation. And that's the week of the 13th of October. We're into the middle of December. So is this big? Should we be surprised by what we're seeing now? No. Right? And this is the value of using fractal analysis and using time frames to help you get an understanding of what price is doing trend-wise on longer time frames. Right? So here you have a situation, if you look at that signal on that week, you break the 20. Well, what's one of our principles? Well, you break one level, you find the next, and it either up or down. That's what happens. We broke the 20 and we found the 50. And when we broke the 50, we were destined to find the 100, which is where the wick of this weak candle currently sits. Right here. Notice the divergence between the 5 EMA and the T-line. Like, if you're trying too long in here, you're trying to front run something. But the chart's telling you that's not in your best interest. At least not yet. I'm sure, there will come a time when that'll be the right trade, but it's not when you're dealing with this. The trend is your friend. This is telling us what the trend is. And the trend is your friend right till the end, and it will tell us, if this is a downtrend, well, here's the start of an uptrend. That trend was our friend right up until here. And then your trend to the upside starts here. It's just rinse, repeat, rinse, repeat. Like, there's no bonus points for hanging on to something for eternity. And and try and label yourself a trader, right? That's not how we roll. Sure, we can utilize different time frames, even long ones, but the point is that you have to take your money in and out to be a trader. And let's not forget that. So what happens if we break this 100? Gets kind of sketchy, right? Because what's this? Our upper value range on the weekly. And this extension wick down here, and that's at 80,575 on this chart. And it's right kind of in this gap. So you start going, okay, if I don't get support, didn't get support here, ended up here. Didn't get support, ended up here. Don't get support, end up where? I have to still believe that this 200 time and price will come together and they'll eventually find each other. Will that process of finding one another get accelerated because of this gap if price doesn't bounce in here? I know it feels like a lot, but yeah, that's quite possible. Like, look at this. It only took a few weeks to do that. And then if you look to the left and you see all of this through here, current price looking for past, right? Now, are we looking real far out? Yep, we are. But we can do that because just with an understanding of where price has been before, it's easy for us to box in those areas. And again, it's not pin the tail on the donkey. Could I extend these levels up or down? Sure. But I'm just trying to kind of pick up the shelf, the most concentrated part of the shelf. And now we can just let this thing unfold. But we're not in the prediction business, although that's what data analytics kind of suggest. But we have to be careful suggesting that in this world. Is all we're doing is just following, right? And when we see that price has something else in mind, well, we'll probably follow it in the other direction too because we're indifferent to price. But I think on this Bitcoin chart, and I'm not saying this to be an alarmist, I'm just saying this because I've always been straightforward, and I don't like the fact that we haven't pushed up on this weekly to challenge the T-line really at all. So this is the first touch of the 100. So yes, you would expect that perhaps you'll get a little bit of support, and I think that's what we're seeing. But the support doesn't necessarily translate into reversal. And I think that's the expectation of many people because they've become accustomed to it. So, but it doesn't always play out that way. Again, we're not here to make predictions. We're just going to let the chart tell us what's going to unfold. But, this test of this wick of the 100 on two separate occasions and then this extension down, I kind of feel like this is going to come into play again. And if it does, that's when it can get really slippery. So let's keep our eyes on this kind of 58.5 range to 65.4, 65.375. That's just kind of boxing in and picking up that that shelf. Right? But, again, it's not about scaring people. It's just about looking at what's on the chart and being honest with ourselves. That's all it is. Right? Let's look at ETH. Because ETH, and again, this is a weekly chart. And we've talked before about the sketchiness or the concern that I have when I look at this chart because we're using fractal analysis, and only because that, and only because we're using a volume profile in combination with it, we can learn a couple things. There's the point of control on the volume profile on the daily, 25.12. You flick to your weekly chart and you look for your volume profile and it's 25.18. What is that? What's the takeaway? The fact that that level is identical, essentially, on both those time frames leads us to believe that perhaps price will be drawn to that level. right? Now, we started talking about this ages ago. This is why, and this is one of the reasons why. There's your first test of the 50. Since you broke it, there's the failure. Now what? Well, you broke this level, so now the 20 is what's in play. Right? And what happens? You fail it. Break one level, find the next. Failed breakout. Take out the previous wave's lows. Attracted to, break one level, find the next level down. And the whole time, and if you can take away anything, the whole time I want you to pay attention to this. This divergence, this is like the cheat code that you have in video games. It's that simple. You don't even have to press 12 buttons to get it. It's right in front of you. The whole time you were being told what the market wanted to do. Right? This is the insurance up here where the market's kind of, and when we look at things, hindsight's always 20/20, right? This goes, oh, that was an obvious top. We could have taken that. Well, at the time, it doesn't necessarily print that way, right? It's got to play out. However, first touch, especially with a wick like that on this kind of doji candle at the top of a bullish little leg, yeah, I'd pay attention, consider shorting that. Now, whether you did it here or here, it doesn't really matter, does it? This is the insurance. All of this in between, that's the part of the sandwich that you get. And there's nothing wrong with that. Here's another example. So here's your first touch failure, first touch failure. Now your next test is the 20 and it fails. Then you get this. I love this stuff. Right? You get these equal bottoms at equal levels. Not always do they play out that way, but quite often they do. And then you get a little pop. Here was remember your second test of the 20, kind of fails. Look at this test of the 50, the second one. It fails as well. This is the ice. You don't want to fail the ice. It's really hard to break through the ice to the upside. Right? But it's just the ebb and flow. And what are you doing if you want to capture good entries on the daily chart? Look at that 4 hour. Like you're getting real hard, clear levels that price is, moving at. And don't get hung up in, in these big parabolic candles and all that stuff that flush you up and down. Just pay attention to the trend. Right? Just pay attention to the trend. So you've got your T-line and 5 EMA guiding you. And then everything else is levels. Right? Break one level, find the next. First touches have a likelihood to bounce or fail depending on whether you're going up or down. And just continue to apply that logic to all the different time frames you're trading. So coming back to ETH just real quick on the weekly and the daily with the POC being at $2,500, I still believe that that's kind of what we're looking for. And if you look at the weekly, this was obviously, look at these lower tops, right? But there's your signal. This is the insurance. There's your signal. Look at the divergence between these levels. That is momentum that pushes them down like that. Why is price pulling so hard? Because it's falling into the gap, right? Where there's nothing else to hold them up. Not all that hard. And what does this start to look like? The failed breakout we talk about. Like, you got to hate this candle. This is essentially, if this little tiny body was just a hair down further, that would be a gravestone doji. But it's pretty darn close. Either way, that big wick that pierced the T-line, pierced the 5 EMA, and then ultimately closed below the 50, Hello. That's bearish. And this, I think, is turning out to be one of these failed breakouts, being drawn back down to the POC, taking out this low, and here's the 200. All of that is a draw for price. Where you have to be concerned is if you don't hold this structure. Because if you don't, and you fall into this gap, then there's not a lot you're going to be able to do to hold it up. You just start looking to the left to see if you're going to find support anywhere. But these volume gaps on the volume profile, if you're not using it, just throw it on your chart. It comes in our script anyways, but I mean, if you're using another platform or whatever, try to use it and get accustomed to it. And I'd be happy to help you use it because it's a valuable, valuable tool. Now, there's a chart that I don't want to look at because it's just so ugly. But at the same time, it's an example for us on why what we do works. And it's the chart of oil. I'm actually going to take this to the monthly. So, this is the kind of break one level, find the next reality. And, that's kind of our top from the time that we've been discussing anyways. Obviously, that's your top. But this is the break one level, find the next, break or break not of the trend, support resistance in a nutshell. This monthly chart has been bearish, the most recent round anyways, since August of 24. So we're working under a sell signal from August of 24 on this monthly chart. And you can see how it reacted to the trend lines too, which is, you don't live and die by them, but sometimes they're nice to see them. But here you go. You've opened up on this move down, the T line and the 5 EMA, and all that's happened is that you've continued to break one level to find the next, and then breaking that level, and then finding the next, and so on and so on. So we're just demonstrating that on these longer time frames, any asset, what we're talking about works. What do we believe price is most likely looking for? Well, right now, I believe, and we've talked about this, and it's the 500 MA on the monthly chart. And I think that's like 40 some odd years of price history, I believe. We can have to double check that, but it's a long time. And this whole time, you've had a real good understanding of the fact that the trend is in place. And that allows you to breathe and sleep at night, especially in this stuff. But what happens if we get down to this level on our monthly chart, and that's $47 and change, and somewhere in this range? Well, all we can do is let's try and look out even farther, and let's go to a quarterly chart, which is 3 months. So there's the box that we identified on that monthly chart. Well, and we know that in the midst of that is the 500 MA, right at $47. So if you don't hold that level, there's the 200 MA that you hit in 2020, 2016, and several times kind of in 1988 and 1999. And that's just on this particular TVC feed. So if you don't hold what you saw on the monthly, can you see it, looking at this other time frame, failing one level and finding the next? They're essentially on top of one another. I'm not saying you're going to stay here forever, but can you not see maybe price piercing through at least, right? And then doing something? At least that's what you hope. It gets support in here. But I'm just trying to demonstrate it doesn't matter the time frame. The chart's telling you what it's doing. I truly believe it's looking for these levels. Not because I'm negative and bearish, it's just because that's what the chart says. As soon as the chart tells me that it wants to go the other way, I'll be trading it the other way, I promise. But right now, it's still bearish. And the reasons why it's doing this, I don't care. All of those reasons are irrelevant. Because the whole time, the chart's been telling us what's important, and that's what's happening to price. And we have the ability to watch it on so many different time frames. And that's the best part. That you can look inside these candles and not miss a thing. Right? You don't miss a thing. Now, this is SPY. Oh, shoot, I want to go to the daily. There we go. This is SPY, which is the ETF for the S&P 500. Let me add the volume profile back in. Hopefully it's nice to us and it likes it. There we go. Now, I've kind of had this area on the chart for probably a week and a half. I think it's in some of our streams from last week too, maybe even the week before. Identifying this area as a potential top. Partially because here's your upper value range, and price seems to have a little bit of an allergy to these levels. Now, how do we know when you have a true double top? It's not when you see the two equal points in price, as the name would suggest, right? It actually isn't considered a double top, and I put that in quotes, until it takes out the center channel of price, or the retracement points, to create that double top in the first place. And the reason I bring that up is because in this case, that level is a long way away at 652-ish, something like that. And where did that bounce happen? Right at a major moving average, the 100 MA. That's why we have these on here, because this is a game of levels, right? Levels and fractals. So what are we expecting to happen at this two equal points in price? That if it was to roll over, it would have to come back and test the 20 MA, which is what it's doing today. And you're printing a sell signal today. But if we were using our methodology and we were looking at this daily chart as our anchor chart, we would be looking at the 4-hour, right? Because we would also try and find an early entry that might end up being quite advantageous when we get to the daily. And, you know, here's Friday's candle that prints a sell signal. So, and then on the 4-hour, what do we have? We've got price rolling over. You saw it as the 20 on the daily. Here it is on the 4-hour as the 50. Why does that happen? Because everything is fractal. What happened as we fell into this gap? Velocity. Because there's nothing there of substance to hold price up. So it's subject to those quick moves to the downside. And those quick moves, you know, will always have some sort of relationship, or I shouldn't say always, but often, with major moving averages or other forms of support and resistance. And this 4-hour candle is actually getting really heavy. What do you guys think it's looking for? The next level down. That's all. You can see it fall into the gap. Of course, you see the next gap down. There's your POC, and there's your 200 MA. The only thing that changes this process of moving down is an influx of money that reverses the whole trend. You might see attempts on shorter time frames, but on the larger time frames, they just don't materialize. Maybe you get a candle that tests the T line and the 5 EMA here, and then fails at a familiar level. And then, boom, that second move down is the one that really gets you. But it's just a game of levels and a handful of rules and repetition, repetition, repetition. And I know the repetition part can sometimes feel a little bit boring, but once you convert that into dollars, you're not going to feel that way. But this is just another example of, hey, we're identifying something that looks a little toppy, and we can do it on different time frames. And then, what's next? There's price on the 20 MA daily. There's a little gap it's been getting drawn into. We know this is the 50 on the 4 hour. If you fail the 50, you fail the ice. We don't want to fail the ice, right? You don't want to fail the ice. You don't want the ice hole failure. But if you do, well, you have to look down here. Right? And again, just keep flipping back and forth between your time frames to see in a meaningful way what's happening. Now, if you're using time frames that are too close together, then it sometimes will get difficult to make a distinction between, price action and a trend move. So that's why if I'm looking at the daily, I want to be looking at the 4 hour that might help me with a decent daily entry or relatively safe daily entry. And if it does reverse and it doesn't kind of kick off on the daily like I would have hoped, I've bought myself a little bit of cushion by being appropriately in on this time frame. And if it does go my way, well then that turns into a runner. This divergence right now is telling me that even though I'm finding this support here, that my trend is still down. That's the takeaway in a nutshell. And again, you could look at anything. I hate to use this as an example, this disaster. So, here's the daily. Not a lot of trading history. So we're just going to start to back this thing up until we can sort of make sense of how this thing trades. I think the 4 hours probably going to be the most appropriate, and it's giving us a volume profile. And this is only happening because it's a relatively new issue. So, in a nutshell, that's what this chart looks like. And, this is one thing that's been really talked up. And if there's a lesson, and this is nothing against anyone who's part of it or anything like that, but we talk about focus on what money's doing, not what people are saying. Well, this is why. Because the narrative and the price action were certainly conflicting. And which do you believe? Are you going to believe price on a chart? Because isn't that telling you what the bulk of the traders are feeling? Right? Like, why would you want to go against that? The trend was down. Follow the trend. 50-day, couldn't break it. Or couldn't break it with meaning. And reversal has been intact since Sunday the 23rd of November. You can't fight this. So don't. Trade it. Learn to trade it. Learn to appreciate the ability to read trend of anything that you're trading. And it can be stock. Let's look at Apple. There's Apple's daily. And we're showing this because it's one of these stocks that's just kind of gone parabolic, spreading out all of its averages. And if we take away anything time and time again, it's that whether we like to think it or not, time and price eventually comes together and you start to test different levels. This daily chart gave you a confirmation sell signal on the 10th, only a few days ago. If you go to the 4 hour, let's see when we get it. On the 4th. Does that make sense? Why we use the 4 hour as kind of a segue into a daily chart? And even if I was in on this candle here, right, and then you get this big flush candle, I'm okay. Right? No harm, no foul yet. Did it produce? You know, as it pushed higher, didn't produce any sort of buy indication, did it? Nope. And then it just keeps heading down. This is the stuff that's going to stress you out. This is the methodology that will keep you sane. Or at least it does me. And it doesn't matter what we're looking at. We look at a weekly chart. What do we take away from this? Look at the support you're getting at the T-line. So yeah, it's a down day, just like this was a down day. We still have all of this open. And again, this is a weekly chart. We're taking out a lot of the daily noise. But we know what happens. If we fail this level, we find the 20. It's a first touch. We hope we get a little bit of support or a bounce. If you were to do that, that would bring price back up again, and we'd be having the 2 equal top conversation. So it would just be a continuation off the 20, taking out those previous highs, just like when you roll over, you take out the previous lows. Rinse, repeat. And if we use kind of a fractal methodology, let's go to the monthly. Is this not kind of an example of what I just spoke of, right? We kind of came back, hit that 20, moved up and took out that previous high. But on this monthly candle, and I hate to use them because you can't certainly use this for any daily trading, but this candle is a little bit extended. Like, we know what happens when price gets too far away from the 5 EMA or the T line. It likes to come back to it. It likes to be able to ride up them. This could just simply be price taking a little bit of a pause, right? You've gone parabolic to the upside, unlike going parabolic to the downside, and then price going sideways. This could be an example where you go to the upside and price goes sideways in this uptrend, gets to these levels, and then boom, moves higher again. Right? That's kind of what we have to wait to unfold. But either way, that brings you back to 261-ish to 252-ish. Not holding these levels, then you come back to test the 20 like it has in the past. Don't hold it, then you start looking for the 50, and then you got all of this grayed out area up here, which tells you it's light volume, and there is the upper value range on this time frame. 144. What's 144 on the weekly? The point of control. So, that's interesting. What the hell are you talking about, you're saying? It's another one of those situations where you have alignments where there would be a draw for price. That's all. So this is the slippery slope event, right? But everything that we're doing, we could be talking about anything in the market. It doesn't matter. It does not matter. Let's see if we can find something that's really interesting. And if you have tickers, don't be afraid to send them in or shut them out. This is JP Morgan's daily. So last week, remember, you had this big down day, and what did it produce? Just a snapback. Look at the following candle. We show this all the time. These two equal bottoms, you have this big move down, and then you get this. They often indicate that toppy kind of bottom thing. Moving average and signal level never, ever, ever broke down below zero on the MACD. stayed elevated on its pullback. That was bullish. Now we got, here we are, those two equal points in price. What would we have to do to kind of determine if this is a top? Could almost call this triple, really, but you'd have to come back and take out these lows. Still a bullish chart even with this candle because it's still trading above the T line. Break down, start trading below the T line, that's usually a signal that you're tired. That's the takeaway. I want to bring up a chart of XRP. This is XRP's daily chart. That, we've been talking about well before price fell off a cliff that particular Friday. I think it was a Friday. There you go. We'll call it Black Friday from now on. But here's an example of XRP telling you on your daily chart after 4 or 5 days of wickiness that you just can't break this trend level. And what happens? You break a whole bunch of support. Sideways price action will always bring, over time, your major moving averages together, just like it did here. And then when you start to break, and you break several at the same time, it's usually a significant thing, and that can be to the upside as well. But here you get a good 2 or 3 days notice. If you were paying attention to this, you'd be watching anyways. But here's your confirmation. On the Tuesday, and then there's the Friday. Right? And this is why a lot of times that people get hurt is believing that, well, such and such can't happen, or it's incredibly unlikely. Well, I understand the rationale. You look at a chart and you go, wow, that's a huge zone between here and there. That would take a real major doing in order to fill up that. And then 5 days later it happens. This is kind of the anatomy of a breakdown. Right? This was your signal down. You can't say you didn't know. We knew. Right? Did we know it was going to dump all the way down to $1.60? No, we didn't know that. But we knew that we should be short. And we understand that when we break levels, we'll find the next. In explosive moves, up or down, this kind of thing, especially in crypto, is a reality. Never stays there, but you see that stuff often. The most important takeaway was the trend. Right? The trend was down. Go to the weekly. Like, you can even tell on the weekly that this was kind of a bit of a downward move here for a while. But there's your signal candle. Obviously, that was an explosive day. And everyone wanted to know what happens next. And the answer was, the trend will tell us what happens next. As long as we're trading below the T line, below the 5 EMA, and it's diverged to the downside, you're in a downtrend and price isn't going higher. And here's an example of that. And by the way, this level that we dropped in here at 190 ages ago, are we sitting on it yet again? Yes. Not because we're special, but because we understand that current price revisits past price. No support. No support. Downtrend in place. Breaking one level, looking for the next level. Current price is looking for past price, and here it has found it. Is it unreasonable? This is why we do this. To take these levels? No. Because we know that we're going to see them again. There's nothing that we've done here that is impossible to figure out. It's very easy to learn. The reason we make mistakes is because we think for the chart, and instead of letting the chart think for us. Right? Let the chart do all the thinking for you. And ultimately, again, just do what you're told. Will the time come when on this weekly chart we'll start to see maybe a buy signal or some, green candles at a supportive area or a place where price has been before? Yeah, right? And that'll be another opportunity to buy, perhaps, if the chart tells us that that's what we should be doing, because it's going to be measuring money, right? This is about what money's doing, not what people are saying. You can have all of the bullish thoughts about an asset, but at the end of the day, the market price will tell you how the masses think. Right? And when they sell off, don't take it as a personal, to be personally offended. This is just the ebb and flow of the market, just in a volatile way that you should expect in this space, right? Let's look at Lilly. Go to the daily here quickly. What do we talk about all the time, right? It's just levels, levels, and more levels. If we, what I like about this kind of setup is that, here you get your buy signal, then quite often you get that retest, right, of the 20 or the T line, and then boom, it's kind of like tagging up in baseball, and then it just seems to lift off. So we'll see what happens. We know that we're obviously in a bullish kick higher on the daily. There's your confirmation. The insurance down here figuring out what we're going to do next has been paid. This candle here is a good example of the indecision, right? So we properly paid our insurance. Now let's see if we hold, right? If you're in on this candle, you could easily have a stop at the bottom of that previous green candle, or which lines up perfectly with the 5 EMA, or maybe you want to drop it down a little bit to give yourself some breathing room. Either way, you're in control. Back your time frame up to the 4 hour so that you can kind of look inside that daily candle to see what you're up against. You would hope. Are you still bullish? Yes. Right? That would be supportive, the T line, and that's the 50 on the 4 hour. Fail it, and again, if this is a failed breakout, again, doesn't matter the ticker, you roll over and you start looking at the previous wave's low as a target. Other alternative, you get support from the 50 and 20, you bounce, take out this high, and then look to take that high out. Rinse, repeat, right? Again, the approach is no different on whether if it's Bitcoin or a pharmaceutical company. It just doesn't matter. Let's look at Google. Another good example for you guys to see what happens when price goes parabolic and you fan out all these levels. And when price is moving higher, I know you don't care, right? Like, it's the most beautiful thing you've ever seen in your life. No one's complaining about it when you're on the right side of it. But you can't get mesmerized by what you believe either, right? The only truth is what is price on the chart. This was obvious toppiness, right? And I understand that, hey, you want to make sure that you're doing the right thing. You don't want to make mistakes, but you can see that's your upper value range. Can't really seem to break it, and you start printing these sell signals. They don't always turn into massive runners, right? But look at this one does. And it does all the things that you would hope it would do. Breaks the 20. Opens up the T line and the 5 EMA because of the velocity. Keeps you honest in these green candles, right? Because this is now what you're looking at. Let's just blow this up. So as soon as this starts opening up, you're like, hey, I'm good, right? Even on those green candles, you're not worrying about it because price isn't breaching those levels, nor can it close above any of them, right? So here's an example. We've shown this before. You're wicking through, pull back, closing below the 5 EMA would be bad enough. I don't like the fact that it's closing below the 50 on this time frame, right? We don't want to fail the ice on any time frame that you're trading. Let's look and see where our gaps are, because that's going to help us. So what happened? Right? Roll over, break one level, find the next, in the middle of a gap. So it's kind of a fait accompli, right? When you lose the POC with a gap like this below and the 50 below, because the 50 becomes the target. Break one level, find the next. First touch, yeah, kind of. So you're hoping it gets support, but I don't like this gap. And I think this could get really sketchy fast, looking for benches of past price. And this bench of kind of sideways trading here is reflected in what? The shelf. Just like this up here, sideways, is creating a shelf. And that's your money. And then if you break down, that's your money. And if you break down, that's your money. You kind of see where we're going? Just a process of levels. One after the other after the other. This is about what money's doing, not what people are saying. And it literally is as simple or as complicated as that. There's something I'm looking for, and I obviously can't find it. Where did I put it? Let's look at Solana. Start on the daily and work from there. Looking at the chart in the rearview mirror is one thing. It's not exactly that clear, is it, when you're looking at it in real time? And I acknowledge that. Right? And that's one of the challenges of doing this. Right? You don't get hindsight on the future. You have to kind of play it out in kind of a candle by candle process. This daily shows you this particular sell signal that breaks the 20. Right? Don't try and get ahead of yourself on front running the chart. Make sure you get your appropriate signals before you do. Green candles at the 50, I have all the time in the world for them. All the time in the world. But try not to get ahead of yourself, because you can see at any given point in time, you can get hurt. And this is why you use stop losses. And I know it's a pain in the ass, and I know you sometimes you get hit and blah blah blah. But never mind. Use the stop losses. They're there for a reason, right? It's not an accident. This is your failed breakout. So here you have these two big, juicy green candles. This price could be going nowhere but up, right? There's no other chance that it could go anywhere. You knew the whole time. Candle by candle, you could see that the trend had not been broken. This is your failed breakout. Here's the previous wave's lows. What did you do? Hello. You came back to the previous wave's lows. And it's a rinse, repeat process. Now, the only time it gets super choppy for you is if you're using too much juice. too much leverage. And let's be honest, that's why a lot of you have struggles at times. It's because you're using so much leverage that there's no room for price to breathe. And then you get taken out. You might have the right idea, right? You might be completely correct that in the direction of price, but because you were using so much leverage that the trade couldn't breathe and you get knocked out. Meanwhile, it would have continued to break down. This is just the same example on the weekly that we did on Bitcoin to tell you, use these longer term time frames. They're there to help you. They're there for a reason. So that you don't get hit by something you didn't see coming. Notice how you're getting support on this weekly at a level that you've been at before. Kind of important. Right? Breaking one level, looking for the next. This is still a bearish chart, however. This is your impulse down, and I do not like these wicks that cannot challenge the T-line, and anything they do challenge, they fade right away. Because this could be impulse down, sideways, and then the trend down continues. You've seen it before. What's going to change this? An influx of money, which is quite possible, and then the whole thing reverses, and you do it all over again. Right? Rinse, repeat, rinse, repeat, rinse, repeat. Let's look at CFX. It's one of the few things that's green today. And in a way that really doesn't matter. Right? Because what are we learning? As soon as we look at this daily chart, well, here's our most current sell signal, and price has been trending down. Well, what's this? Since the 12th of November. So for over a month. So could you be short for over a month? Yeah, you could, as long as you were comfortable monitoring the trend and you were well protected because you had a good entry, which on this chart, because of that wick to the previous candle, you'd get in even earlier. Yeah. So, yes, you can be in a trade for an extended period of time with limited risk, as long as the trend is confirming that you're on the right side of the trade. As long as you're on the right side of it, you're going to find that, like, especially in some of these leveraged ETFs, if you're on the wrong side of one of those things, the erosion is intense. If you're on the right side of it, you don't even think about it. But it's important to get on the right side of the trade. Is this market breaking down? As we speak, it is. Let's go back to the 1 hour SPY. 1 hour SPY is breaking our most basic bull bear indicator, which is the 200 MA. The 1 hour told us we should have been short on Friday as well. There's the 4 hour. I think the 4 hour told us the same thing, if I recall. Yes. So here it is Tuesday afternoon, and everyone's like, the sky's falling, the sky's falling. And you're sitting here with your feet on the desk. Because you were able to determine, using fractal analysis on, a little ramp onto the daily in plenty of time. It just so happens it stays on our daily as well. But you're good. You would have been good. Like, here we are. If this melts down, you're in early. Isn't that what we try for? Like, isn't that why we're doing this all the time? So that we can get a real effective, efficient, safe, profitable entry? Isn't that why we're doing this? I thought so. That's why I do it. I don't care if it goes up or down. I do not care. I know some people find that hard to believe. I do not care. It's just a chart. The chart's meant to be monetized. I don't want to hear people pontificate about what they think was going to happen because the wind blew a certain... I don't give a rat's ass. Is all I care about is what price does. You can pontificate till the cows come home. I'm just going to monetize this chart. That's all we have to do. Don't worry about what other people think, what other people say, or what they say about you when you tell them you do this, and then all of a sudden they tell you that you're batshit crazy. You can't predict where price is going. You have no reasonable way of knowing. It's all about how much money you make and don't make, or supply and demand. Blah, blah, blah. And maybe they're right. Because all I know is that we have a mechanism and a tool for you to monetize the chart so that you can put money in your pockets without having to listen to other people try and tell you what they believe is right with a whole different set of priorities. No one is going to look after you better than you. That's why we're doing this. So that you can look after you. And you don't have to become dependent on or reliant on other people. And that could be, maybe you get really accomplished at this and you take it very seriously and treat it like a profession. Mitigate risk on a daily basis. Maybe you want to do it for a living or subsidize your living so that you're less reliant on others. That's what we're giving you the ability to do. This is not financial advice. It's just helping you learn how to read price on a chart. It's just, remember the follow the bouncing ball thing that you used to see when you were a kid watching cartoons or whatever the hell that was? That's all we're doing. We're just following the bouncing candle. And when the bouncing candle has something to bounce on like support, chances are it's going to continue to bounce higher. But as soon as it can't bounce anymore and rolls over, we're going to find that out too. But the chart will tell us. And it's not about picking tops and bottoms, right? Sometimes they become obvious to us, but they're not obvious until they're after the fact as well. So let's be honest about what we're talking about. Does that look like an obvious top here? Yeah, but you know what? When you were looking at it back here, there's a whole bunch of different things going through your head. It'll play out. Just let the chart tell you. Every green arrow doesn't mean it's the end of the world. Every green arrow or red arrow and every green arrow up doesn't mean it's, utopia. It's the ebb and flow of price. Sometimes you have big runs. Sometimes they're shorter. Don't trade chop. Wait for breakouts or breakdowns. Try not to make it overly complicated. We have a tendency to do that to ourselves, right? We often overthink things and we start to, maybe that guy that I heard in a podcast was completely right about something, right? All of that stuff gets in your head. Me too, right? That's why we do this, so that we don't have to worry about that anymore and just simply follow the chart. Here is the FEG chart. Here's your buy signal. I think we talked about this last week or the week before. This buy signal comes right at the point of control. And you know what? I'm just going to look at the chart. That's all I'm going to look at. Hey, there's a buy signal. After, an extended downtrend, like a lot of things have experienced. But hey, finally, breaks through the 20, and it holds the T line. Right? These, to me, when price comes back and tags these levels and then pushes higher, I always interpret that, to me, is bullish. And again, it's like in baseball, tagging up and taking off. Level by level. Again, it doesn't matter what we're looking at. We know that if we break one level, we're going to look for the next. Unless there's a big, sell and then it rolls it over, or a big buy that pushes it up. This here is your upper value range, your lower value range, and then this thin red line is your point of control. So we know by breaking this level that it puts this level, which is the 100 MA on the daily chart, in play. And we found it. This red candle did not break trend. It came back, wicked the T line, and pushed higher. and found what again? That same level. You see, so it's testing and retesting. I like the fact that it moved to the upside. I say that not knowing that this candle followed it, but what's the takeaway? The takeaway is that the divergence, was still up, right? Diverged into the upside. Here you are again, testing the T-line, pushing higher, closing just above that 100 MA. There's your resistance candles, right? What do we say when we see these? Right? That's obviously this candle, this doji candle at the top of a bull run. And it brings it right back to the 20. And here's your current candle. What's the takeaway when you see this? There's a reason why I wanted you to look at this. This big red candle, and even this for that matter, because it tried to test the 200, which is encouraging, but it didn't break trend to the downside. So these are flushing. This is kind of like the flush situation that we talk about often, right? So this trend is still intact on this daily chart. As long as this divergence is intact and it's triggered obviously from an upside move, that's still bullish to me. The fact that this current candle opened above the 50 on the daily is also positive to me. Is the challenge obvious? Sure, right? You can see you have to break through again the 5 EMA, and you can see it trying to test that 100 MA, and it kind of came right back. But that's kind of the current challenge, is breaking through this level. And then when you do, hey, what's up here? There's your upper value range, and then there's your 200. And you could be in one of those situations where it's the second mouse that gets the cheese. If it doesn't hold and it breaks down, well, you just look for these areas in here for support. But it's encouraging to see a green candle opening above the 50 after these two, because it's not capitulating, at least not as we speak, right? So that's positive. And all this, again, is still open and diverged. And let's bring up the volume profile, because I want to see what our opportunity and risk is. So this gap and the POC here down here, and I guess to some extent too, the lower value range, that's your risk to the downside. That's if you don't hold and then you break down, this is POC is a logical place for price to show up. Don't hold, look for this lower level. Now, the upside is, again, upper value range and the 200 MA. It'd be nice to have another test of the 200 to see what happens. Because sooner or later, you know, they don't always get rejected. Might feel like it for a while, but eventually they break out. And, you know, hopefully you can see how price has been really testing a level at a time. This pullback here, although it probably felt uncomfortable, is actually completely appropriate, and I actually think that's encouraging. You have to have proper retracements. You just don't want complete and total breakdowns. So you had your retracement coming right back to the 20 and tagging it and moving higher. So kind of fingers crossed that bullish type of price action continues. Right, so this is, again, good for you guys to finally start to see that move in the direction that you want, and not just move there, but do it in a way that's logical, which I think is kind of really important. Let's look at our friend. What do they call this? Strategy? Something like that? Here's the daily. Another great example of really the anatomy of a breakdown. Everything is on this chart from the 20, the 50, the 100, 200, 500, and 1,000 MA. And I know it sounds extreme on the long side, but what it does is it helps us frame in price action on shorter time frames. Because again, we believe in fractals. So watching this break down, failing one level and then testing and failing, breaking through. This is actually the 50 and the 200, testing and failing. What's this? For all of you that pay attention to patterns, that is your death cross. Right, when you have the 50-day moving average crossing down through the 200, that quote unquote is the death cross. And not often does it actually produce those kind of deathly feelings right away, but this one did. So, like literally right on the day, it just spit out a big red candle, and it's been kind of a downward trend ever since. So in here, you're just breaking and failing the 20 or the 50 and the 200. Right? The two that you don't want to fail, you failed them all at the same time. Haven't even tested until here the 20, and although it did print a buy signal, you have to be aware that it's the first touch, and those first touches are likely to fail. So you got a little bit of resistance here for a few days, and then just kick off another wave down right at the 20. And again, it looks like you're trying to take out those previous lows. And ultimately, look for, because you broke every level. Don't think it can't happen, because it can. And you don't want to be the one to round trip this stuff. Leave that for your friend. All right? You break everything without any sign of support at any of those levels, the beat goes on. Right? It can go on to the upside too, but this is just the example of the beat goes on. I really believe you're looking for 1,000 days of price action on the daily, and if we flip to the weekly, there's your 200. Right? This is the line we drew on the daily, but there's the 200. Everything's fractal, and our belief was, as this broke down, and we can go back and check the receipts because all of these things are on YouTube, we identified this area because we felt that, so here's your this kind of center channel that we talked about when you have equal tops. Price would have to come back to be a true quote-unquote double top, take this out, which it does. So now we know we have an absolutely true double top. This is on the weekly, mind you, as well. This past price, this bench of past price, that's where buyers and sellers have shaken hands in the past, with the belief that as we kind of let go, price would look for this level and ultimately find these levels in here. Are we there yet? No. Nothing goes straight up, nothing goes straight down. It never happens in the amount of time that you want it to. But are we well on our way? Absolutely. And did price behave as we talk about and show every single week, twice a week? Yeah, it does. Or has. And what's going to happen if you don't bounce here and or get any support? Perhaps you look for the next level down? Well, that's outrageous. Is it? Is it really? I don't think so. Things can happen to us that we don't expect. Right? There's oil. Did it break all of its support on the way down? Absolutely. And it's continuing to do so. This is a different feed from my other one, but it shows you a volume profile. So look what happened on oil. Big gap on the weekly. What created this gap, guys? These big parabolic candles filled with fairy dust and air. They're pretty, but there's not a lot of substance to them. And what happens when they get tested is that they completely let you down. All right, so here you go. Price is crumbling all the way back to the point of control. And this is the monthly chart, sorry. And in all likelihood, if you don't hold, you look for the next level. I'm not trying to be a downer, but that's just what we see, what price tells us it's doing or wants to do. This is Monero. All kinds of drama around this coin at times, right? For different reasons. But it's being very respectable when it comes to how it behaves on the chart, right? Are you getting support on the way up? Yeah. It looks choppy on the daily. You can smooth it out a little bit on the weekly. Let's just get rid of this for 1 sec. still a bullish chart on the weekly? Yeah. Did this big red candle flush out a lot of traders? Probably. And that's why they're getting back in. But the trend never changed, right? And we knew that. As long as you see this, you're okay. I get that hindsight's 2020. As you're looking at this, as you're looking at that candle, freaking out because it feels like it's giving everything away, and how can it not find the 20 tomorrow? Right. The trend was telling us that we were still okay, and we are still okay 2 weeks later. Learning how to trust the chart is very hard, right? It takes a lot of time and a lot of repetition to go through the experience of minor heart attacks as you're going, as you're learning, right? But it's something that's totally doable. And, quite honestly, there's a benefit to paper trading, especially when you're learning, because you can go through the ebbs and flows, the ups and downs on various different time frames without having to have the anxiety of having an open trade in the background, where you feel like you need to be looking over your shoulder at, every moment. So, don't be afraid to paper trade at all. It's going to take out a lot of the angst from your trading. Right? This is Zcash. And again, another chart that we've talked about before, and it gives you a real good example of what happens when price starts to retrace. And let's just, that you can see how you were getting support from the 20-day moving average, which is the green. And, here's another test of it. It's it's a shocking candle when you see it, but it's also not uncommon. It's not like you haven't seen them before. Now you break down. As soon as you see this divergence, that's telling you that the move is down. So if you feel, for whatever reason, that you missed a top, or if you're entered on this candle and you felt your instant reaction is that when you start to see this one move higher, that you air it out, pay attention to where this thing closes. Like, this is all based on closes. Did the divergence to the upside break and give you a signal to the upside? No. What happened here? And this is where you can take a step back and breathe. This candle pierced the T-line, pierced the 5 EMA, pierced through the 20 MA, and completely retreated to close below the 20. Is it green? Yes, but it closed below the 20. The divergence to the downside was always in play. Now here's your next candle. Divergence is still down. You tested those upper levels, pulled back right away, but look where you close. Below the point of control, and all of this divergence again, still in play. And it's just step-by-step monitoring, and I say that loosely. I don't mean to be staring at your screen all day long, but I mean step-by-step, candle by candle, you're kind of told what's going on. So here you have a candle at the 50. The first touch, I believe, yep, since it broke out from here. So you would expect it to get some support or a bounce, right? That's the expectation of how price reacts the first time it gets to these levels or major moving averages. And here you have this divergence to the downside. There would be a whole bunch of traders that are waiting to long at the 50. Guarantee you. Right? They got automated trades set up. Right? Just sitting there waiting. And it's not irrational, right? Hey, there's an obvious level of support you can see through here too, right? Like, it's not irrational. But the advantage that we give you with the script is the ability to get safe signals after all the BS has been sorted out that you see in the rearview mirror, and the ability Again, not to get faked out. You get faked out because you front run. This is a great example of where that would happen. A lot of people want to jump in at the 50. I get it. But the trend, this was telling us that no, they're selling off. The buyers aren't there yet. Where do you think we're going? Back down here. This is probably going to be a failed breakout. Perhaps. We'll see. Let's see our volume profile so that we can see where the money has and has not been. We have not printed a sell signal on the daily. So what do we want to do? Let's go to the 4 hour and see what we're dealing with. Because everything is fractal. So you have a sell signal on the 4 hour up here. And what's interesting is this is a test. See this wick? This wick tests the 20 MA on the 4 hour and pulls right back. And this divergence that we see that was created way up here, right? This is our sell signal. You're breaking the 20, you found the 50, you broke the 50, you found the 100. The fact that you've broken it once, and if this is the failed breakout that I think it could be, you'll come back and take out these lows on the 4 hour and probably look for the next level down. If you price moves higher, you could trigger a buy signal on the 4 hour, retest the 20, move through, and start to test the 50 to the upside. So the upside potential and the downside risk. That's all you're looking for. And this helps you mitigate risk on it, like to take a lot of the risk off the chart. If you're not using the volume profile, please do. You're going to find it. It's going to help you a lot. Layer. This is something that we, months ago we used to chart all the time. I think lives were lost, people trying to short it up here, which was impossible, right? As long as you see that divergence to the upside, that's bullishness. Look at all the support you get from the 20. Continuation, continuation, continuation. And then one day, it's the short of a lifetime. But don't try and, like I said, I think lives were lost people trying to short this monster. But until it wants to roll over, just don't bother. It's not worth it. Don't try and front run this kind of move. You don't realize that it's this kind of move when you're in it until you've lost all your money trying to short it at the top, and then it rolls over. And I can hear some of you laughing already, right? That's how it works. So this is just an example of when something completely capitulates. Look at it on this weekly chart to take out the noise. There's really been no, there's your top, the 2 equal points of a top again, right? If you're looking at multiple time frames, you're going to see this stuff. There's your point, right? Why does it point out? Because they're short-term averages react quickly to massive price movements. And points and flats can kind of indicate changes in directions, with the points being the most extreme. And that's what you're seeing here. And at no time since this top has it been a reason to go into it long, right? At least on this time frame. And if you were short, anywhere up here, and you're asking yourself, or saying to yourself, this is too good to be true. I've been in this thing for for ages and ages and ages. What do I do? Do I take my money? Well, obviously you can do some of that, but the point that we're trying to make is that the chart's been telling you that you can stay short on this weekly chart simply because the trend has not changed. And you'd be saying that week after week after week after week after week after week, because the chart's telling you. Now, if in the middle of the chart you tried to, thinking that those 3 green candles were your ticket to the promised land and you were going to go long and take out that high way up there at 350 or whatever that is, 340, no, You were being told the whole time, it's a sucker's bet. Don't make it. The chart was telling you that you were still short, or should be still short. Right? Don't go against the trend is all we're trying to say. All right. I think that's probably it for today, and I will certainly want to pick this up on Thursday because we're in some interesting times, right? This Bitcoin chart just in closing is still bearish, right? So we don't get excited about green days until they demonstrate that they're going to be meaningful moves higher. And right now, trading below these levels under this sell signal, while struggling with this resistance with the 50 creeping down on top of us, doesn't give me warm fuzzies. So there's a lot of work that has to happen to break this level up here with the hope that you get into that gap and start to challenge levels higher. I really think you have to be careful looking at the weekly that you don't break the 100 and get into this weekly gap to the downside. And all of this becomes your saving grace. And that's way down there again between 58 and 65. So this is going to be really interesting. This is how this plays out. So is this a doji? Today it's a doji that could indicate a change in direction at a support level, or it could be a doji today and something completely different tomorrow. We still have a lot of days to go, but we will pick this up on Thursday. And thanks for stopping by. I appreciate the questions that you send me all the time. And let's get together on Thursday at noon. Take care, everybody. And I look forward to a